Hello and Assalamualaikum. This is Group 6 and we will be presenting question 6. Our group members consist of Ahmad Fatih Ilmi, Ardini Kistina, Ni'iman Hayani, Nur Nadia Karmila and Nurin Nabiha.
Assalamualaikum warahmatullahi wabarakatuh. I am Nur Nadia Karmila binti Maknawi and I will be presenting the first question of the essay, which is discuss three functions of the government. So, the first economic functions of government is to protect the private property and national security of the market. If a nation has a crime epidemic, it can deter investment and lower the standard of life. The government's job is to maintain fundamental order and stability by upholding the rule of law. This entails safeguarding individual rights. A government can fund by policing by raising general taxes. The example of public good that need provision from the government are policing and courts. Secondly, the government is entitled in providing public services. Because of the free rider dilemma, public goods are seldom delivered in a free market. As a result, the government must provide these commodities. Traffic lights, roads, and rule of law are examples of public goods. In a free market, government services such as education and healthcare are also offered one piece at a time. Lastly, a government should reduce poverty or inequality among the people of the country. We may see an increase in inequality and poverty in a capitalist economy. It is possible that this is due to inheritance and opportunities. It may also be the result of monopolistic control. So, the government can feel compelled to ensure that everyone has equal rights, such as by investing in education so that even those from low-income families may obtain qualification.
Hello everyone, my name is Nurin and today I will be presenting on question 2 and 3. So, moving on to national budget. There are three types of national budget, which are balanced budget, surplus budget, and deficit budget. In the case of balanced budget, the total government spending in a fiscal year is equal to its estimated revenue. Although economists consider this to be an optimal scenario, achieving it may be difficult for the government. Since there is no room for additional spending, a balanced budget does not immediately translate into financial stability in periods of deflation or economic crisis. Next is the surplus budget. The surplus budget occurs when the revenue exceeds the spending of a country in a fiscal year. This means that a government's tax revenue are higher than the amount spent on public welfare. A surplus budget implies a country's financial affluence, which ensures that the excess funds can be used to pay dues, lowering the interest payable and benefiting the economy in the long run. On the other hand, the deficit budget occurs when a government's projected spending exceeds its estimated revenue in a fiscal year. This type of budget is beneficial in times of economic downturn as well as in increasing the job rate. A deficit budget is beneficial in periods of recession because it generates increased demand and boosts the economic growth. So, the third question, two types of tax structure. The first diagram shown is a graph of proportional tax. A proportional tax is the one that is levied at the same rate on all income levels, regardless of whether income increases or decreases. The tax will remain unchanged. Proponents of proportional tax argue that they improve the economy by motivating people to work more because there is no tax penalty for making more money. The second diagram shown is a progressive tax. A progressive tax is a tax rate that rises in step with income. The higher the percentage of the tax, the higher the revenue. This tax is levied in order to raise funds for the underprivileged.
Assalamualaikum, I am Ahmad Fatih Ilmi and I will be explaining question 4. Explain how central banks employs instrument of monetary policy using open market operation. Open market operation are transactions in which a central bank purchase or sell securities. These are purchased or sold by the country's private banks. As the central bank purchases shares, it contributes cash to the reserve of bank. The bank's lending capacity has decreased, and a central bank buys securities during unemployment when it wants expansionary monetary policy and increases the cash reserve of commercial banks to increase the money supply. It sells them when it executes contractionary monetary policy. Next is legal cash reserve requirement. It is the minimum amount of cash required by all commercial banks to be kept in the central bank. A low reserve requirement allows banks to lend more of their deposit. And lastly, bank or discount rate. It is the bank rate or discount rate is the interest rate in the central bank charges bank for loans of reserve. Increasing the discount rate decreases the money supply, tools in contractionary monetary policy during inflation, and decreasing the discount rate increases the money supply, and lowering the discount rate is expansionary because the discount rate influences other interest rates. Lower rates encourage lending and spending by consumer and businesses. Likewise, raising the discount rate is a contractionary because the discount rate influences other interest rate. Higher rates discourage lending and spending by consumers and business. Discount rates change are made by Reserve Bank and the Board of Governors, tools in expansionary monetary policy during unemployment or recession.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ardini Christina Bentisata and I will explain question number 5, which is measure of fiscal policy that can control unemployment. First, taxation. Tax may have impact on the economy because they determine how much the government can invest and how much money people can spend. As a result, in order to minimize the unemployment, the government will reduce the general tax of burden on the citizen or the community in order to encourage consumer spending. People's spending expenditure will rise if exercise duty, income tax, service tax, and other forms of tax are reduced. Furthermore, lowering more business tax will encourage more spending and will result more jobs. We proceed to public expenditure. Since it will influence the aggregate demand, the government will increase the government spending to control unemployment. This is normally done during a recession. There will be an increase in real GDP as aggregate demand is increased. Therefore, if firms, which is a business, produce more, demand for jobs will rise and resulting in lower demand, deflation, and employment. Furthermore, with an increased aggregate demand and solid economic growth, less business will fail and resulting in less job losses, and it will increase in civil servant salaries.
Hi, my name is Ni'iman Hayani binti Nur Zaman, and I will explain to you about question 6, which is all the measures of monetary policy to control inflation. The first measure is open market operation. So, in this measure, the central bank will buy or sell government bonds and other securities from member banks. And this is the most effective instrument because it influences the cash reserve in commercial banks. And the central bank has the ability to change the direction of its open market operation according to the circumstances. So when there is inflation, the central bank will sell securities to reduce the cash reserve banks have on hand. And the cash reserve amount will decrease when firms, individuals, and other commercial banks purchase these securities. A higher reserve means that banks can lend less, which is a contractionary policy, and it will eventually control inflation. So the second measure is legal cash requirement. Legal cash requirement, which is the minimum amount of cash required by all commercial banks to be kept in the central bank. So the central banks tell their members on the amount of money they must keep on reserve each night. So whether or not the central bank increase or decrease the legal cash reserve requirement, it's all depending on circumstances. So when a central bank wants to restrict liquidity during inflation, it increases the reserve requirement. This will leave banks less money to lend, hence it will slow the economic growth in the midst of inflation. The third measure of monetary policy to control inflation is called the bank or discount rate, which is the interest rate the central bank charges on loans of reserve to banks. Changes in the bank rate or discount rate affect the cost at which borrowing can be made available to banks from the central bank. So when it wants to discourage banks from borrowing during inflation, the central bank will raise the discount rate, and this action will reduce liquidity and slow the economy.
So that is all from our group. Hope you enjoy and understand our presentation. Thank you.